Hello friends, so the end of the tax year is coming up really soon, and before the new tax year starts on the 6th of April, here are 10 money moves that you need to take to make sure you are making the most out of your money. So if you are in the UK, the new financial tax year will begin at midnight on the 6th of April, and with that comes a reset of all our tax allowances. But before we can even think about the next financial year and what we can gain from it, let's talk about what you need to do to close out this year and make sure you are making big money moves, because there may be a number of money changes for UK households, and now is the perfect time to get on top of your finances. But before we get into these tips, please make sure to hit that like button, share this video with someone who needs to improve their finances, and of course, don't forget, if you are looking for free money, feel free to use the stocks and shares links down below. You get a free stock worth up to £100, which could in turn mean 99 free pounds. So if you like free money, you know exactly what to do. Okay, let's get on with this video. So the first thing you are going to do is to make sure you have claimed your working from home tax relief. From the moment we went into lockdown, many people have had to work from home, and with that you can now claim tax relief to help you cover the costs of working from home. So I'm talking about your broadband costs, your additional heating costs, and all your additional energy costs. And whether you have enjoyed working from home or you just miss being in the office and some of the office gossip, one positive thing that has come out of this is that you can claim up to £125 back from the tax man, and you should see that rebate in your next payslip. All you have to do is head over to the HMRC website and fill out the form. Now, the link to this website is in the description box below, but just note the amount you receive is completely dependent on your tax rate. So if you are on the 20% basic rate of tax, you can actually claim tax relief on £6 a week, and you would receive £1.20 a week in tax relief, which is 20% of £6 a week. And this goes towards the cost of your household bills. But if you are on a higher tax rate, for example, the 40% tax rate, then you can claim £2.40 a week. So just head over to the government website and make sure you make your claim. The second thing you need to do is to make sure you use up your ISA allowance. So for those of you who don't know, an ISA is an individual savings account, and the main difference between an ISA and any other savings account is that it offers you tax-free interest payments. So you could get more for your money. Now, there is a limit on how much money you can put into your ISA in each tax year, which is called the ISA allowance. And for this year, that is the 6th of April 2020 to the 5th of April 2021, everyone was allowed to have an ISA allowance of £20,000, which allows you to boost your savings by receiving tax-free interest. So if you want to take advantage of this year's allowance, you will need to move your money pretty quickly and make sure it's in an ISA account by the 5th of April. But it's worth checking to make sure that an ISA is actually the best option for you, because if you have an account that pays a higher rate of interest, then it might not be worth making the switch. So just do your due diligence and find out whether this is the right option for you. The third money move is to make sure you are topping up your lifetime ISA. So the lifetime ISA is a great saving option for anyone wanting to build up some funds for their first home or even towards their retirement. The lifetime ISA, or LISA, lets you save up to £4,000 a year towards your first home or retirement. And the added benefit is that it gives you a cash bonus up until the age of 50. So if you're aged between 18 and 40, you can open a lifetime ISA and you'll be able to save up to £4,000 a year into that account. So you can imagine, if you were opening an ISA at the age of 18, you could end up getting a maximum of 33,000 additional pounds. So the good news is that you can also withdraw your lifetime ISA money once you've reached the age of 60, or use it earlier to buy your first property. But it is worth noting that any other withdrawals will involve a penalty, which is currently set at 20%, but set to rise to 25% next year. So take advantage of this offer, especially if you are looking to purchase your first property. Also, it's worth noting that if you are purchasing a property with someone else and they are also first-time buyers, then you could both set up a LISA account and make the most of the additional cash bonuses. The fourth money move is for those who are married. Now, please make sure to make the most of the marriage allowance. Now, not many people actually know about this, but as a married couple, you may be eligible for a £250 tax break thanks to a law that allows you to share your personal allowance with your partner. Now, many people don't know that there is a marriage allowance, which means that if you have an income of less than 12,500, you can actually transfer your personal allowance to your partner if their income is above £12,500. So, to be clear, the marriage allowance lets you transfer a portion of your personal allowance to your husband, wife, or civil partner if you earn less than £12,500 a year. And that means your partner could reduce their tax by up to £250 for that given tax year. And the added benefit is that you can backdate this for 4 years and you could end up receiving up to £1,150 back. So make sure to check if you are entitled for the marriage allowance. Now, it is worth noting that to benefit from this allowance, you actually need to be married or in a civil partnership, be earning less than the personal allowance, which is £12,500, so that you're not paying income tax, but your partner should be paying income tax at the basic rate, which usually means that their income needs to be between £12,501 and £50,000 before you can receive this marriage allowance. Just know that you actually cannot claim marriage allowance if you're just simply living together but you're not married or in a civil partnership. So for more information, do check out the government website, which I have linked down below in the description box. Money move number 5 is to check whether you are entitled to child benefit. So if you have a child who is under 16 or under 20, if they've stayed in approved education or training, you might actually be entitled to child benefit. In fact, many parents are entitled to claim child benefit, but the amount they're able to claim will completely depend on whether one of them earns more than £50,000 a year. This is then withdrawn if they earn more than £60,000 a year. However, if you are earning slightly over this threshold, you can actually get around the limitation by increasing your pension credits. And what that means is that you can contribute enough to your pension to get your salary back down to $49,999 under $50,000, and then you'll be able to get full child benefit again. Another option is to make more charitable donations from your income over the £50,000 limit, which you'll need to declare to HMRC on your tax return. Child benefit is actually quite simple to claim, and the average payout is around, I think, £60 a month. Just know that in order to claim your child benefit entitlement, you will have to fill in a tax return each year, but failing to do so can lead to a request from overpayment from the taxman or even have an impact on your state pension credits. So please make sure you check that out. However, if you don't wish to fill in a tax return each year, then you can just withdraw from the payments. But we can go through that in more detail in another video, so please hit that like button and comment below if you'd like any of these points in a more detailed video, and I will happily do so. Now, another money move to make is to claim your cash back for your work uniform. If you are one of the millions of workers who wear uniforms for work, you may actually be entitled to claim extra cash if you've had to pay for your work uniform this year. And it's actually quite simple to claim. All you have to do is follow the steps on the government website, which I've linked in the description box below. And what it will do, it will assess and tell how much you are actually owed. And each claim can take around 3 weeks, and the average payout is around £60. So if you're using your own money for things that you must buy for your job, and these things are only being used for that work, then you can claim this money back. And the good thing is that this includes claiming for having to repair or replace small tools that you need for your job, like scissors or an electric drill. It could be items that you need for cleaning, repairing, or even if you need to replace specialist clothing like a branded uniform or safety boots. It can also count towards business mileage, but obviously not general commuting, travel and overnight expenses, and if you have to pay professional fees and subscriptions. So go ahead and check out if you are eligible for tax relief using the link in the description box below. Tip number 7 is to check your council tax. Now, nearly all households are expected to see their council tax increasing in this coming year, with more councils signing up to increase their council tax by the maximum amount of 5%. Now, this change means that if you are living in a Band D property, you are set to see your bill increase from about £50 to £100. So check to see if your council tax will be changing and by how much. Tip number 8 is to make sure you get the best energy deal you can. Now, gone are the days of loyalty to your energy suppliers. In fact, new figures from comparison website comparethemarket.com have revealed that there's about 182 fixed rate energy deals which are set to expire between now and March 31st, meaning that many people could see their energy bills jump up in the coming months. So, if you're a household that does nothing, that means you'll be automatically switched to a default tariff, which is usually more expensive. And what I found is that the the regulator Ofgem has actually said that they will be increasing the price cap on default tariffs by £96 a year from the 1st of April. So make sure that by switching your energy supplier, you could actually end up saving yourself a great deal of cash if you move on to a new tariff rather than sticking to the default tariff. So have a look at the comparison website and see if there's a better deal for you. Tip number 9 is to check if you are eligible for a £5,000 Green Homes voucher. So if you're a homeowner or a residential landlord, you can actually apply for a Green Homes grant voucher towards the cost of installing energy efficient improvements to your home. In fact, the government introduced this scheme in a promise to make thousands of homes more energy efficient. And so they've been offering homeowners up to £10,000 in vouchers for you to carry out work like insulating your home to reduce your energy use, installing low carbon heating to lower the amount of carbon dioxide your home produces. And if you're eligible, you receive vouchers to cover 2/3 of the cost of eligible improvements, up to a maximum government contribution of £5,000. Now, it was that around 2 billion were promised to households when it was launched, and there's around 110 million which has been claimed to date, but the Chancellor has confirmed that actually 320 million will only be available in the next year, which means that there'll be fewer vouchers available to the general public. There are also rumours that the scheme could be stopped later this year, so if your home needs any insulation improvement and they can be covered under the Green Homes voucher, go to the website linked below and check if you qualify for a voucher as soon as possible to ensure you don't miss out. Money move number 10 is to make sure you are boosting and making the most of your regular pension contributions. Now, with a tax year coming to an end, it might actually be a good time for you to consider topping up your pension to increase your savings for retirement. And that's because when you're saving into a pension, you receive income tax relief. Now, the annual allowance for pension contributions is £40,000. And it's also worth noting that you can bring forward unused allowances from the previous 3 tax years, as long as you are a member of the pension scheme within those years. So if you've been automatically enrolled into a workplace pension, the window is about to open for any changes to your contributions. And you and your employer must pay a percentage of your earnings into your workplace pension scheme. Now, the minimum payments currently is set at 5% for you and 3% for your employer. But I know for a lot of people, employers are giving really good matches for going into a pension scheme. So if you can afford to increase your payments, now is the time to do so. Let me know in the comments below whether you have made any of these money moves listed in this video, and if you have any other tips that can help us make the most of our money. After all, we are a community who love to share all our favorite money management tips. Also, remember, if you are looking for free money, make sure to hit that stocks and shares link below. Deposit money into your account and get a free share worth up to £100. I mean, that's up to 99 free pounds. Don't forget to hit that like button and subscribe so that you don't miss any future uploads, as I am genuinely sharing my journey to financial freedom and early retirement. Also, share this video with someone who is looking to make positive changes to their finances. And don't forget to check out these videos, which will show you all the financial tips I am currently implementing in my life that have saved me thousands and thousands of pounds. Thank you so much for all your support, and I will see you in the comments below, and of course in the next video. Have a great day. Let's make those money moves. Do take care. Bye.